All right. Well, welcome everybody. Thank you for joining us this Wednesday lunch hour for our Why Borrow webinar. Over this hour, we hope to give you an overview of the Impact Investment Program here at the Calgary Foundation and answer any questions that you might have about the process and experience of borrowing. We're pleased to be joined today by Alex Laidlaw, our Director Impact Investments here at Calgary Foundation, Megan Emmett from the Youth Singers of Calgary, and Sean Bade from the Calgary Quest Children's Society. Before we have our speakers introduce themselves, I'll give a little bit of an overview about what the next hour will look like. We'll start with a panel discussion, and then after that, we'll open it up for Q&A with questions from our attendees. So please feel free to use the chat throughout the discussion. If you have questions that you would like answered during the Q&A portion of this webinar, you can submit them using the Q&A feature down at the bottom of your screen. And of course, if you have any questions that are not answered today, I'll provide our contact information at the end so you can reach out. So let's jump in. For our panelists today, I'd love us to go around and give an introduction. If you could give your name, your role, and a little bit about your organization and mission. Maybe we'll start with Megan and Sean, and then Alex, you can come up at the end. So Megan, do you want to go first?
Thank you. Thanks, Christina. And thanks everyone for coming today. My name is Megan Emmett. I'm the CEO of Youth Singers of Calgary. We are a not-for-profit youth performing arts company, and we're celebrating our 40th anniversary this season. And yeah, we own and operate our own facility that has 4 studios. So yeah, we have over 600 children and adults as well. We do offer a few recreational programs for adults, use the building on a weekly basis. And additionally, we have 4 other anchor tenants in the city who use our building weekly. And we own and operate this building thanks to support from the Calgary Foundation and this program. So super happy to be here today and share what we did and help you in any way that you need to get going.
Great. Thanks so much, Megan. Sean, would you like to introduce yourself?
Sure, yeah. Thanks, Christina, and thanks everyone for coming. My name is Sean Bade. I'm Director of Operations at Calgary Quest Children's Society. So basically, we run programs for kids and young adults with moderate to severe disabilities. Our kind of bread and butter main program is called Calgary Quest School. It's a grades 1 to 12 school that has been operating in Calgary for over 40 years now, and we currently have about 200 students in that school. And then more recently, in the last few years, we kind of identified some gaps in the market for our kind of programming. So we've recently launched accessible summer camp programs and transition to adulthood program for young adults with disabilities aged 18 to 28. It's a new program. We have about 20 young adults participating in there right now. And as a final point, I guess, 2 of our main values is we try to provide all these services, inclusion and accessibility are our 2 big ones. So we do try and provide these services so, the maximum amount of students and then participants can access our services. For context, I think we're probably half as expensive as the next kind of similar private school to ours. So we have also been greatly helped by the foundation in some of our projects and growth over the last few years. So I'm happy to be on the panel to talk about it with you guys.
Great. Thanks so much, Sean.
Yeah.
Alex, do you want to introduce yourself? And maybe as part of your introduction, could you also give us an overview of what is an impact investment and how it might be different from a grant?
For sure. Yeah. Hi, everybody. So I'm Alex Laidlaw. I'm the Director of Impact Investments at Calgary Foundation. I've been in this role for almost 5 years now. Feel super fortunate to have found this corner of the foundation where it's a really exciting opportunity to explore how we can support the sector beyond grant making. And a bit of a best kept secret at Calgary Foundation. It feels like the community still doesn't know that this loan program is here. So glad to be doing this today to make sure we get the word out that borrowing from us can be an option when you're looking at options to advance important work in the community. And I come to this work from a background in the not-for-profit sector, so I don't have a commercial banking background. I've been on the other side of these projects trying to raise the funds and line up the timing of funding to make sure projects happen. So I think that gives me a pretty unique perspective to know some of the things that and challenges and hurdles that these projects face as they get underway. What makes an impact investment different from a grant? Kind of a fundamental question of what this program is and what we do. So these are loans repaid with interest. We're looking at making investments into projects that are very much similar to structure to bank loans, a term loan structure. The interest rates are also more or less comparable to what you'd see from a bank. So this isn't a concessionary rate financing where you're getting a break and kind of a grant-like boost for your project in the form of lower interest. It really is meant to fit those corners where projects might not be able to have access to the financing that they need and require some flexibility or some responsiveness or something unique that we can provide as Calgary Foundation as an unconventional lender. So the key thing that makes an impact investment different from a grant is that we don't get to give this money away. It's not money that we can grant every year. It has to be complementary to our grant making processes, but it's repayment with interest to be able to do that.
Thank you. So, Megan and Sean, both of your organizations have borrowed from Calgary Foundation to support your projects, as you talked about. So I'd love if you could tell us a little bit about your project that was supported by Calgary Foundation's Impact Investment Program. Megan, I know that it was used to help purchase the ATCO Performing Arts Center. Could you talk a little bit about what inspired the purchase of the Performing Arts Center?
Sure. So Youth Singers, started small and grows, and we are show choir, so we're singing and we're dancing, and we have a lot of equipment, sound equipment. And at one point we moved from choral risers to more dance platforms, which really allowed us to accelerate our aesthetic product. But really, we're about developing human beings, and we do that through the performing arts. So we're about helping kids find confidence, find their voice, grow resilience, and develop leadership skills through the performing arts. So we had been leasing space, and things were getting more expensive. We were moving around and realized we needed to have a bit more stability in order to continue to grow because there was the need. Um, so in about 2007, 2008, our board found the space that we're now in, and it was a commercial lease. So we're in an industrial area. We're in Highfield industrial area, and converted really an empty warehouse into these studio spaces. And we had a good arrangement with our landlord. But the rent we were paying every year was just, money that was going out the door. So the board engaged in a many years long project of looking at the long-term financial equation of owning versus renting, which I know, is a question that lots of us face in different aspects of our life and business. And they got good advice. We did a fulsome study looking at were there better places that we could look at purchasing, and then there were conditions around what we would need to have in place to purchase. And so it coalesced in around 2017, 2018, with deciding to go ahead and find the funding to purchase the building. So then, yeah. What happened was we had a have a long-standing relationship and friendship with ATCO and Margaret Southern. And so Mrs. Southern was able to make a personal donation that got us about, really launched our silent phase of the campaign, so to speak. And then we were able to borrow the balance, and there were several options explored. And at that time, the board landed on the arrangement that we have now with Impact Investment. So we borrowed, they have invested half of that balance that we had to earn, and then facilitated the other half through one of their donors. So what's really fantastic for that investor is they don't need to keep tabs on us or worry too much. We report to Calgary Foundation, they pass that along, and whatever terms need to be renegotiated as we go, they follow what the Calgary Foundation does. So it's given them a lot of confidence in the arrangement, and also, yeah, just given us a really open and clear working relationship.
That's great. Thank you so much, Megan. And Sean, for Quest, what led Quest to securing and renovating a new school space?
Yeah, so I think the easy one-word answer is necessity. So our existing school building, it was built kind of around the 1960s. So not only was it physically on its last legs, but even functionally speaking, it's just not suitable for our programs or our students anymore. I think, lots of people on this call probably remember what those schools were like. I'm sure some of us attended them 20 years ago. Small little elementary school, not much natural light. Um, I think there was a different philosophy of education back in those days. So especially for our type of students, lots of them have sensory issues and colors and how bright or dim the lights are. All these kind of things matter for our student population. And so, like I said, none of those things were possible anymore in that old school building. So it was really necessary for us to find somewhere new. Um, it was a bit of a challenge. There's certain requirements, not only for schools, but again, specifically for our kind of schools. You need green space, outdoors is very important for our students, movement, walking, all these kind of things. So it did take us a long time, but luckily we did manage to finally find a space. But unfortunately, it wasn't a kind of purpose-built school building. It was something that we would have to renovate and convert into a school building. And that comes with a pretty large price tag, especially for a nonprofit like ours. And sorry, I think the other thing I'll mention too is, we're always behind this idea of growth. And that's largely because there's way more students that need services like ours than there are seats available in the city. Just as an example, just our school, I think last time I checked, we have a waiting list of almost 200 students. So not only necessity old building, but we're also finding ways to, open another classroom or two, even though it's small incremental growth, maybe we can take 20 more students next year or, ideas like that. So anyways, like I said, luckily we were lucky enough to find a building. It had a big price tag on it, and I think we'll get a little bit more into the details later, but it was a little bit complicated for us to get everything financed and organized. And really, I think the foundation was kind of that last piece of the puzzle that helped us get across the finish line there. So yeah.
Thanks so much. So
Yeah.
hearing about how your projects have evolved, how Calgary Foundation's loans have supported that. Um, Alex, I'd love for you to expand a little bit more on why does Calgary Foundation lend to charities and nonprofits?
For sure. Yeah. I think there are kind of two main forces that brought us to this place of playing this lending role in the community. One is this idea of question that all foundations are being asked, especially with an endowment model of how can you leverage that asset base for the community's benefit? Are there ways that you can uniquely look at how you hold assets as a community foundation and do good with those assets that you can't grant every year? So that was a question that I think drives a lot of this impact investment sector. But I think the other component was seeing credit needs in the community that were going unresponded to. Our very first foray into impact investing before we had a formal program was looking at the C-Space and funding the startup costs associated with purchasing the land that became that project. And it was just a timing consideration for the most part, where the grant funding that was committed wasn't there when the purchase needed to happen. So we provided some very short-term bridge financing to make that work. And in doing that, we recognized that lack of cash flow is something that affects many throughout the sector, and that the banking sector, which are essential partners in the charitable sector in so many ways, they're just constrained in how they can respond to some of those things. So there was this middle ground gap where we could play an impactful role as a lender to the community, where creditworthy projects that just don't score well in conventional metrics or have the numbers that banks look for on their balance sheets need some financing and need some support to make things happen. So that's kind of where we felt we could slot in and play this impactful role, complementing the financing that's already out there and trying to find a way that we can catalyze important work in the sector by being a lender.
Thank you. Yeah, I think it's a common thing for organizations to look at like a bunch of different financing methods before deciding whether borrowing from Calgary Foundation can be the right fit. Um, Now, Megan and Sean, could you tell us a little bit about why borrowing from Calgary Foundation proved to be the right fit for your project? Sean, maybe you could speak a little bit. You borrowed from both your credit union and the Calgary Foundation for this project. So could you talk a little bit about the circumstances that led to that arrangement?
Yeah, sure. So like you said, we borrowed from our credit union and from the foundation to make the project happen. When I wouldn't characterize a credit union, necessarily as a typical lender, say the big five kind of banks. So in our experience as a nonprofit, the credit union was actually much more willing to discuss and understand some of our financial position and operations than any of the big banks were. I think that kind of talks to Alex's point about how we didn't meet these traditional type of metrics that they generally look for. So we didn't really get any traction from big banks. And then with the credit union, they're a little bit more understanding and accommodating, we found, than the big banks, but they still have a limit as one of these, big typical type of lenders. So essentially, the credit union was able to structure us a loan that gave us, just enough money to get the project done. But they weren't really willing to have a further conversation about, certain risks that we might face, or, if certain things don't go the way we planned. They weren't leaving us much, safety valve, or, there was really worrisome if a few things went wrong that this project might not work out. And that's kind of when we reached out to the foundation, and we found that they were much more willing to have that conversation. Again, back to Alex's point, I think Alex's background probably is a big factor. As he said, he comes from this side of doing things. So we found the foundation was, rather than looking at these traditional balance sheet metrics, they were much more willing to kind of talk to us about the project, understand where I'm coming from in terms of what risks I'm facing, and why we might need, a little bit of additional funding just to not only get this project done, but to get this project done in, a sensible risk management, more comfortable way than, just having kind of just enough money to get across the finish line.
Right. And Megan, Youth Singers also considered borrowing from a traditional lender. Is that correct? Maybe you could
Yeah,
speak a little bit about that?
yeah. We had time. We were here, we were established. We had already successfully raised a lot of money to do that transformation from a warehouse into studios. And then we also, a lot of choirs are rehearsing out of church basements or community centers. And so Calgary really is missing rehearsal space for not-for-profits that is a secular space and that is, youth focused and then has all that infrastructure there. So we had built some of that. And so we did have more time, but again, it really echoes what Sean was saying was the vision that other places would come in, other organizations could come in and rent, and that we could, with a bit more investment, start to like really serve the community and generate revenue that way too. And, it would lift everyone. And so other places having a purpose-built, ready to go environment that they could come in without worrying about volunteer labor to set up and strike and all that kind of thing to just honor the artwork. And there's a statistic out there that I can't fact check that more Albertans sing in choirs than play hockey. So I think we have found that we are packed, like we're packed. So the ability to kind of it's the same thing that Sean was saying that the banks wanted to have certain assurances that would have been really challenging for us to meet. They wanted they weren't as willing to take the risk or as able to take the risk. So we also knew being, the first time into a commercial real estate ownership situation to have that guiding hand that would be easy to work with, understanding of our mission, supportive of what we're trying to accomplish, and seeing it past our own charity, but what we could really provide for the city. So I think those were the conversations. And if I may, we didn't know when we were going through this process, but we signed the dotted line in December of 2019. And then March 2020, running a choral organization suddenly looked very different. And the fact that we owned our building and could promise and the community about entrances, exits, the furnace turnover rates, all the different kinds of things that the public then needed from a facility, especially coming to take the risk of singing in a facility in an enclosed space over the next, 20, 24 months. It turned out to be just the greatest gift that we did own this space.
Thank you so much. It's so helpful to hear how different the context was for both of you, but also the similarities and the crossover for your projects and why financing through Calgary Foundation proved to be a fit. Um, Alex, you engage with the organizations whenever you receive an application and often well before applications are submitted. Could you talk a little bit about what some of the common reasons are that organizations ask for financing in your experience?
For sure, yeah. And I think I'll also probably be able to answer a question on the fly, that the first one in the Q&A from Huggable, because it ties in exactly with what I was going to say to this question, which is so the majority of the financing needs we see are a lot of capital infrastructure. I think that's where borrowing feels most comfortable, and is often the kind of one-time costs that lend themselves to this kind of financing approach. But we do have some projects that are more growth oriented, where it's organizations doing financing for undertaking operations that are expanding, earned revenue that's expanding to be able to repay financing over time. So we see a range of both those potential needs. And it's not exclusively capital that we're working with the loan program. So if you have any other questions, feel free to put that in the Q&A. But I think that one answers the Huggable question there, and that yes, growth capital is something we can finance. The common reasons, it's all different shapes and sizes. I mean, we've shared some stories through LinkedIn posts in preparation for this webinar, and it's really interesting to see the kind of systemic things that often bring organizations to this need to borrow, or this kind of cash flow gaps that affect these projects. Sometimes it's as easy as the funding that you know is coming isn't there when you need it. That could be that you're running a capital campaign and you have a committed donor base, or you're getting to a committed donor base, but generosity doesn't move at the speed of your construction timelines. So that's just, you need to have that flexibility to pay your contractors today when your donor check might not come until the holiday season. Or you have a committed grant, but you need to get through the paperwork process to be able to get those funds issued and paid to you, and you don't know what that timeline is going to look like. Or a grant that's reimbursement based, where you need to show the work is completed before you get payment from your funder. So there's just a lot of those little reasons why for the charitable sector, cash flow isn't there in the moment you need to spend, but you have confidence that it's coming. And all of those create just a borrowing need or a gap that can be plugged through financing.
Thanks so much. One of the biggest fears for many borrowers is the uncertainty in undertaking a big project and how to manage risks. Megan, you already talked a little bit about how U Singers borrowed in 2019, right before the pandemic. And given the near immediate impact of the pandemic, your original repayment plan wasn't feasible anymore, right? So could you speak a little bit to your experience of working through that with Calgary Foundation, and with like restructuring your loan?
Yeah. So, I mean, we were all there and we know what it was like, try not to dwell on it too often, but the uncertainty really raises the cortisol and puts you into a state. So we were communicating with the Calgary Foundation right away, every 3 months, with our regular updates and what we were seeing and what we were trying. And just the support was always so positive. And how can we help you? Can we amplify this or that for you? To kind of just let's keep going together as a community on this. But when the loan was to be due after, I think it was the end of 2023, we'd had complete interruption to every single one of our revenue streams, and we were trying to rebuild. So we had another fulsome conversation, submitted a series of documents and plans. Alex and his team were down here meeting with us. The process took several months, but they were very predictable and clear. Alex said, okay, by this date, you're going to need to show us X, Y, Z. By the next date, we'll need to see this. And so that kind of generosity of predictability really gave us the ability to say, okay, we think we can or not, or what are we going to do? And, we're very, very grateful for that. And we did renew different terms, of course. It was later, and interest rates are what they are. But again, willing to take that risk with us and continue. It's just been something we are very grateful for. And I would encourage communities, charities in this city to know this resource is here for you. It'll look different for whatever place you're in, but they'll be clear with you and frank, and also yeah, predictable. And I hope that answers your question, Christina. Yeah.
Definitely. That
Yeah.
absolutely answers the question. Thanks so much.
Mhm.
Sean, your organization is a little bit earlier on in your borrowing journey with us. Could you talk a little bit about what challenges you anticipated with your project and how borrowing from Calgary Foundation helped mitigate some of the risks for Quest?
Yeah, for sure. So, like I mentioned earlier, our credit union, they did lend us, just enough money to complete the renovation in the new facility. But that loan, again, it didn't deal with any of these potential challenges or risks that might arise. So I think the really, there's a raft of risks when you get into a big renovation project like this. But I think the really big ones that were in our mind as we were getting into this project were of course, possible cost overruns on the construction budget, again, because we kind of felt like we had just enough money to get it done based on that budget. So with a big budget like that, even 5% could have put us in a bad situation. So that was one big one. I think the second biggest challenge was our new landlord in the facility is actually as with lots of leases, they provided quite a big leasehold allowance for us to help us renovate the space. But the timing of those payments was, we didn't know for sure when we'd receive that. The way it typically works is, the organization will pay for the construction or a progress claim out of pocket, and then you submit a claim back to the landlord and they reimburse you for those funds. So, we felt like we were pretty okay, but if cost overruns were 5% or more, that was trouble. Or if the landlord payments were late, that also could be a cash flow timing problem for us. So basically, even though we had enough cash to complete the project, because of this timing issue, I felt like we needed a little bit more money before we take a big risk like a project like this. And that's kind of where we ran into a wall with the banks and the credit unions. They were willing to lend us this money to get it done, but they weren't really interested in having a conversation about, listen, these might be my risks. So that's the kind of the point when we found the foundation. We reached out to the foundation. I think the process was excellent. We kind of started, I think Alex and I had a couple of long conversations right off the bat. And he really tried to understand, uh, we're just looking for some additional capital, basically as a safety valve to mitigate some of these unpredictable risks. So turns out Alex did understand where we were coming from. Again, like I said, he's not as worried about the traditional balance sheet metrics. And as I told our story, I think he really got it. He knew where we were coming from. And as it turns out, we're through that phase of the project now, but our landlord was almost just over a month late, actually, with the first repayment that they owed to us. So at the end of the day, this safety valve loan from the foundation turned out to be critical for us to get the project done. I'm not sure what would have happened had we not had that extra cash available when I needed it. So yeah, so like I said, great process and experience from start to finish, and most importantly, it was a conversation I couldn't even have with the traditional banks. So really important for us to get it done.
Thanks so much.
Yeah.
I think this is a good point for us to open up questions from the audience. We already have some great questions submitted. For our attendees, if some questions have come up for you along the way, or if they continue to come up, please feel free to submit them using the Q&A feature. To start, why don't we start with a question that was submitted in advance from one of the attendees. So this is for all of our panelists. For many nonprofits, borrowing can feel like a risky move. So, how can organizations determine when taking on debt is actually a strategic investment in growth rather than a financial burden? Maybe Alex, do you want to kick this one off and then we can pass it to Megan and Sean?
Sure. And this is a tough one. So I'm excited to have our panelists respond kind of from their perspective and context of how they were making this borrowing decision, because I don't think there's a perfect answer that this is the criteria you have to hit to be able to say, yes, I'm ready. We do have a loan readiness self-assessment tool on our website that you can use to kind of think about what we look at when we're looking for loan readiness, when we're going through our evaluation process and the various dimensions of that. And that can help feel assured. But I think it really boils down to you're not borrowing on the hope you're going to repay, you're borrowing on the confidence you can repay. That's an important piece of the puzzle. It's not taking a leap to say, we need to do this and we think we can do this. It's we know this is coming and we just can't wait for the money to get here to do the impactful work. So that's, I think, the key kind of critical maybe distinction in thinking about is borrowing the right option for me is it's not, we hope we can pull this off. It's we know we're pulling this off, but we just can't wait any longer to make this work happen. And I think that's the maybe the critical mindset to say, whatever the context, borrowing is the right fit in this circumstance.
And I can add on to that because while our situation wasn't a pressure cooker of time, if you look, at the big scale, it was the right moment. It was when the landlord was ready to sell, they were ready to move on, and who knows what other decisions they would have made. We knew from our silent phase that we had all our ducks in a row, and we knew that we could raise the money, and it was there. And it's a bit nuanced, but for a capital campaign to go and be asking people to invest in your charity and in your vision, like in our case, a vision not just for our own programs, but for a gap in the city's facilities. Um, to have a bank believe in you versus to have the Calgary Foundation believe in you as a partner, like they're showing that they're willing to invest in us. That's a positive message to other people in the community who may want to give. I'm not saying that our decision to go with Calgary Foundation was only because of the optics, sort of to go for the capital campaign, but it definitely is a consistent and authentic story, that we know we have the community support. We did our research, we did our surveys, and we were ready to go, and the timing was right. And look, the Calgary Foundation's on board with us too. They've looked over our paperwork. They know that that we can do this. And so then it gives you that confidence that you may already have and your plans have, but now you have a partner who also has confidence in you. Um, that's just really a wonderful place to be starting from.
Yeah, and I can maybe add a few thoughts too. I think borrowing can feel risky. I guess it usually does feel risky. That's understandable. But I think also it can be, debt can be a very useful tool. I think the way I look at it, debt can become kind of a strategic investment in the organization when I think it's really important for you to think about things like, what are we trying to achieve with this borrowing? Your mission, values. I think things like if you can grow your organization's impact faster or more sustainably with this borrowing, maybe through facilities, maybe through investing in staff or technology, whatever that looks like. But I think it's important to have this idea about how we're growing our impact rather than maybe borrowing for just to fill shorter term holes or something like that. I think that's kind of a really important kind of basis for why are we borrowing and what are we trying to do here. And then, I come from a finance background, so it might be a typical kind of answer for me, but just, really strong financial planning, think about repayment, how are we going to repay? Can we repay? What does this look like? Cash flow projections, things like that. But I think if you meet those few criteria, you're really confident that hey, we're growing our impact here, faster or something like that. We're fairly confident, like Alex said, you're confident we can repay this by so and so date. Yeah, I think, like I said, if you meet certain criteria, you mitigate the risk as much as you possibly can. You can never mitigate all of it. But yeah, I think in those cases, debt can totally be a strategic investment in your organization.
And I would add on to that if you have a strong board and if you have, there are grants and other funding you can get to do those explorations, to maybe look at what's our business plan if we don't, what's our 10-year, 5-year outlook if we do this investment or not. You can map out some different paths, and there can be funding available for you to help you with that decision.
That's great. Thank you all for sharing your thoughts on that. It's so helpful to hear, especially from borrowers, from organizations, about how you kind of view taking on debt, use it as a tool, and that kind of thing. Um, we had a question for Alex. For projects that you ultimately deem to be fundable, could you provide a little bit of insight into the typical time frame from initial conversations to receipt of funds?
Yeah, for sure. So, um, first to mention, we accept applications in this program on a rolling basis. So there's no fixed intake timelines. It's not like our community grants process you might be familiar with, where there's 2 deadlines every year. We can accept an application at any point in time. Whenever possible, we try and line that up with our existing meeting schedule for approvals, but it's open at any point for an application. And encourage organizations to have a few conversations with us before they go to the work of applying. It isn't application as step one, it's really application as almost step 5 or 6 in the process, where you've talked it through with us before you go to the work of putting through the formal submission. But our turnaround time is about 3 months from the application to issuance of funds at its quickest. A little more breathing room is better. It's nice to have a little bit more space. And we have done it a little quicker a few times when the capital needs or the funding needs are time sensitive. But it does take us about 3 months to do the underwriting, turn the process around. The process will feel very familiar for applicants who have gone through our application-based grant streams, in that it is a written application through the same online portal, and it is a face-to-face meeting with our impact investment committee. So those things will feel similar to your other exposure to Calgary Foundation. The difference being there's a lot of questions from me in the in-between. I'll pepper you with questions to just make sure I understand the inside notes of the project for our committee's consideration when we do meet.
Thanks, Alex. For our panelists, we had a question about when you reached out to Calgary Foundation to explore the option of financing, what were your biggest concerns or fears? What were you afraid to ask for? And what kinds of things helped alleviate your fears?
So I noticed the question is from another foundation hoping to offer. So they're asking to know how to be better on that side of it. So I would echo what I previously mentioned, was the predictability, the clarity, timelines, and then check-ins. The Calgary Foundation is really great at sending me reminders, your report's coming up, our conversation's coming up, and it just makes me smile, the care that they're taking. So I think, knowing that charities are always concerned and dealing with stresses about getting their staff paid, knowing that they, are, yeah, maybe worried about risk. We don't take this kind of risk all the time. I mean, I am a fantastic choral director, I'll tell you that much, but I don't have a finance background. So to care for them, I would say, like that giving them clear information, clear deadlines, following up as in advance as possible so that they know, that really helps people feel more at ease.
Yeah, and I think for us, you said what concerns or fears did we have? I'll be perfectly honest. My main concern was, having talked to a bunch of other lenders. I thought, I didn't realize how different of an approach the foundation took initially. So my concern was it's just going to be another hard pass, right? They're going to look at these metrics, and then we're not going to solve the problem. So how did the foundation alleviate those fears? I think again it goes back to what Alex just said. I think the process, the way they approached this application for a loan, like Alex said, the loan application wasn't step one. We had conversations first. He tried to understand where we were coming from. He tried to help us with the loan application process. So right off the bat, provide a lot of comfort. And then I think when we did finally submit the application, my initial concerns were alleviated, just like I said, because of all the conversations I'd already had with Alex, and then I knew that the foundation understood where we were coming from. So again, it doesn't mean, I didn't know whether the loan would be approved or not, but I did know that, hey, they're at least going to give us a fair shake, and it's not just a hard pass based on some metrics. So I think the process from start to finish is what really made it comfortable for us and then alleviated our concerns and fears.
I know this question was for our panelists who were not the lender, but Megan's already said kind of clarity being an important piece. And I do think that's something that maybe is a little bit different and distinguishes our process from others, in that sometimes it's a black box. You submit your application, you don't know, don't hear, don't have a sense of what's going to happen. We try and be as transparent as possible throughout the process so that you have a good sense of if things are coming together in a way that we're feeling good about fit. I think that gift of clarity is something that too often is difficult to get from funders who are pulled in lots of directions and needing to make difficult decisions. So I think that maybe is part of what really an intangible of the program that offers a lot of value is like, where you stand, hopefully at every step of the process. And that makes a big difference.
That's great. Thank you all for sharing your insights. Alex, is it usually social enterprises that borrow, or what does the typical borrower look like?
Yeah, for sure. I think social enterprise isn't our typical borrower. I think most of the organizations who borrow from us, social enterprise is a tough concept and slippery. What is a social enterprise? Lots of arts organizations have been earning revenue forever. Is that social enterprise? Yes, but does that trigger that button when you think of it? Maybe not. So I think it's difficult to say, is it a social enterprise or not? But I think more often than not, we're getting repayment through more traditional business model of non-for-profit charitable work. It is repayment through grants and donations. It is repayment through the traditional revenue streams that organizations use. So I think that is a viable business model that can support borrowing. It just does so in a way that doesn't always show up in the numbers clearly in a way that conventional lenders can see. So I think more often than not, we're looking kind of at conventional structures, but social enterprise can be a big part of a plan, and especially with a growth-oriented plan, the growth in earned revenue can certainly be a catalyst for financing.
That's helpful. Thank you. Alex, you talked a little bit about in your conversations with potential borrowers before the application period. By the time you get to the application, you usually have a pretty good understanding of whether or not the project is a fit for the program. Could you talk a little bit more about what kinds of things would make a project a fit for the impact investment program? Is there a certain cash position that you need? Any other kinds of factors you look at?
Yeah, for sure. And Christina, maybe if you want to pop the link to the self-assessment tool in the chat, that's a good starting point in that it talks about a lot of the different dynamics we look for, because some of them are tangible things like, are you forecasting enough money that you can repay this debt comfortably? And that's something that we look at. But other things are a little more intangible, like how does your board feel about borrowing? Is everybody on board with this plan? Is the organization aligned in this vision moving forward? And those are things we look for too. So all of those criteria definitely go into the process. And it's not always a case of like, you need to hit this specifically. It's a weighting of all of the factors, and is there enough there to feel comfortable and confident? And in some cases, you've got most of it, and there might be a piece that needs some work, and come back in 6 months if there's timeline for the project allows, having done some of that work to fill in a piece of the puzzle. So that can sometimes be the way it goes too, and that fit is iterative. It might be you've got most of the components of fit right from the beginning, but there's a few pieces that need a little bit of extra time just to get, and capacity dedicated just to get things in shape. So that document is a really good overview of some of the different dimensions of things we look at, but there's no magic numbers. There's no, this is where your cash needs to be, this is where things need to be. The circumstances of the if you have a reimbursement-based grant in place and you just need to bridge that funding, that can be quite simple, assuming you know you can carry the interest in the interim. So it all depends on the project and the way that you intend to repay.
Thank you. And we've had a couple questions about the loan amounts. Is there a minimum or maximum loan amount that Calgary Foundation would approve?
For sure, and I'll add some extra kind of parameters around that. So minimum loan amount, we've said we'd go as low as 100,000, and that's all the parameters around this program are a little bit soft in that we don't want to miss out on an opportunity to be impactful in the community if there's something that requires it. But the process is a bit cumbersome. There are legal costs involved. So the smaller end of amounts isn't always a fit for that process. That said, we want to know if there are financing needs in that smaller scale as well. So please reach out if you're thinking, I need to borrow just a bit of money. It might not be something we're built to do now, but if there's enough need for that in the community, it's something we consider how we build to do that in future. And then there's no hard cap on how much we can lend. We're constrained a bit by how much funding we can allocate to this program. So if your asks are large, we would need to consider how we can accommodate that. But there's no number on the high end. We've gone as large as 5 million. We've considered requests for larger, and we could definitely look at any request depending on the circumstances. For those larger amounts, we'd like to see recycling of funds a little bit quicker because we don't want to tie up our capital for a long time so that we can't support other projects in the community. And that goes to the other parameters. So 10 years is kind of our maximum term length. So that's, we can, again, be a little bit flexible there, but we're not doing long amortizing mortgages like you might get from a bank. And that's something that could limit us. And another thing, we always encourage organizations to have conversations with their banks or credit unions in parallel because they can offer things we can't. We don't have the administrative capacity to do something like a revolving line of credit because we're just not built like a financial institution where transactions in and out are easy. It's a lot more time consuming for us to send you money or receive your money. So those are some kind of limitations in the structures we can provide. But again, everything we say around the program is a bit soft in that we want to have a conversation with you to know what your financing need is to see if we could build something that would respond. So please do reach out if you need something that's outside the box of what we're already doing.
Thanks so much. We've also had a couple questions about the funding for feasibility or capacity exploration. I think, Megan, you talked a little bit about that earlier. Maybe if any of you have thoughts, ideas on what kind of funding sources are available for organizations who might be looking for that kind of feasibility work, I would love if you could speak on that.
I was specifically thinking of the Future Focus program. I actually don't know if that's limited to arts organizations, but it is. Okay. So that's sort of working with Rose Foundation, Calgary Foundation, and Calgary Arts Development. So of course. But honestly, I would start with Calgary Foundation and ask on the other side and just see what's available. And I think keep just ask. And we have come, there's a lot of family foundations in Calgary too who are interested in capital and, might want to get on board at a certain level and be partners with you through the whole process. That's what I would offer.
Yeah, we can also pop some links in the chat with those who are listening in might be familiar, but our Strategic Opportunity Grants program can fund small, urgent kind of pieces of feasibility and capacity building work. So that's a potential fit for some of those things through Calgary Foundation. And then community grants as well can be a stream where you could get some feasibility work done of various shapes and sizes. Feasibility is also kind of a slippery thing when you're looking at these types of projects. There's lots of different dimensions of what feasibility could mean. It could be doing the kind of rent versus ownership analysis that Megan spoke to. It could be looking to develop a capital campaign plan. There's a lot of different components of what feasibility could look like. I'm happy to have conversations with organizations who are kind of trying to feel out what feasibility means in their context of testing, because it could be informed by what we'd look for as a lender in the end. But also have conversations with your peer organizations who may have done something similar, because that's often the best source of information. Is hey, we've we just went through some of those things, and we'd be glad to tell you what our experience was, who we worked with, how we made those decisions. I think that's the invaluable learning is knowing what your peers have done, if they've done any kind of similar feasibility work in the recent past.
Thank you so much. I recognize we're starting to get close to the end of our hour, so maybe we'll wrap up with one last question for all of our panelists. And that is, what is one piece of advice that you would give an organization who's considering financing to support a project?
Uh, I think really easy for me. I know I keep going back to the process, but if you're kind of on the fence and you're thinking, maybe should we do this? Is it too risky? Kind of where we're at. Just start the process with the foundation. And like I said, you don't even have to do the application first. Talk to Alex. He'll give you some thoughts about, what he thinks about your project, and, is it feasible? Is it not? But I think, you don't even have to get to the, hey, I'm applying for a loan stage. I think you can reach out, talk to Alex, and then go from there. I think that's a great kind of first step.
Yeah, and I would say, like, also harkening back to what Sean said earlier about having a need in the community and believing in your mission. If you have a dream, um, and you're ready to take action on that, and you see a need, and you have strong supporters around you, on your board, and in your community, then like life is long. Like, let's take that risk and take that chance and just have the conversations. There's no harm. Um, we we say we don't know what the future brings, but we do. The future brings what we make it, in the sense of knowing the life that we want to have for our community and committing to it. So we will all have different skill sets in how we commit to it, but if you believe in your mission and your board does, and just start a conversation, that's the first step.
Perfect. Sorry, I'm multitasking. I was responding to Sally's question in the Q&A as well. So Sally, hopefully if you have any follow-up questions on rate, let me know, but more or less comparable to the bank financing out there, which is the answer on rate. One piece of advice for organizations considering financing would be to get advice on how to build to that dream. Like, I think I spoke to, sometimes it can be an iterative process. And I think too often organizations might feel like they need to have everything ready before they start those conversations. And I think it's easier if you start the conversations as you're exploring what getting ready looks like. So don't feel hesitant to have conversations in those early stages of, we have this big dream and we want to be here. And we're trying to figure out how we're getting there, because it can be helpful to have advice along that path. So that would be my suggestion is don't feel like you need to hesitate and have everything perfect before you start the conversation, because that's just an impediment to getting there as fast as you can.
Great advice. Thank you all for your insights and your thoughts. We are at 12:55. I don't see any other questions in the Q&A. So I'll just thank all of our panelists, Alex, Megan, Sean. Thank you so much for being with us for this last hour, for sharing your experiences and your insights. It's so helpful to hear about the borrower experience, especially for other organizations who might be considering it. So thank you so much for taking the time today to share your stories with us and letting us hear about your projects and your missions. If for our attendees, thank you for joining us as well. If you have additional questions, or if you would like to schedule a meeting to talk about your project, please feel free to reach out to us. I'll pop our contact information and a link to the Impact Investment Program website in the chat for you. As I mentioned at the beginning, this meeting was recorded. We'll share a copy of the recording afterwards, just if you missed anything, if you want to rewatch anything, if you have fellow organizations who are interesting and weren't able to make it, please feel free to pass it along. And thank you again for tuning in. We hope to chat with you soon, and we look forward to hearing about your projects if you are interested in exploring financing.
Perfect. And Christina, before people sign off, I'm realizing I said no tech snafus at the very beginning, and I think we might have one in that. It looks like the chat might only be limited to hosts and panelists. So attendees, if you haven't seen those links that Christina has mentioned she's sharing, we'll make sure they're included in the follow-up you get by email. So don't worry if you haven't gotten the links that we've said or contact information we said. We'll make sure we get that to you after the session.
Good catch. Thank you, Alex.
No problem. Wonderful. Well, thanks so much, everybody.
Thank
Yeah,
you.
thanks everyone. Thanks
This
for having
was
us.
awesome.
Yeah. Take care.
care.
Take care.